What is one crazy fact about money that you have noticed in recent years? Well, it was the seemingly never-ending effects of inflation that kicked in for us. For some reason, even an amateur in finance might have felt that currency isn't a reliable source of investment. Paper currencies have ended up getting entangled in the inflation story. Why does gold appear to be a better alternative than the paper currency we are so obsessed about? Let's find out. We can more or less say that money has become a bit of a fleeting concept for the entire globe. If you look into history, it's crystal clear that money has been through rough patches, especially when bulls, bears, and collapses embrace the economy. But if we were to call out an asset that stood the test of time, trends, economical lows, and ups would be gold. What comes in your mind when we say the word gold? For us, it's the ancestors treasuring it and using it only on special occasions. However, that is not all. Gold has been around for 2,000 years and is universally considered an epitome of wealth and power. In many countries, the married couple are given gold as their marital gift rather than paper currency. Have you ever wondered why they do so? A simple explanation for this would be gold has earned the reputation as a stable asset during the hard times of inflation and breakpoint, so the precious metal naturally becomes a useful hedge against nerve-wracking inflation. Have you noticed that the metal's price has gone up whenever US dollars are labeled underperforming? So whenever an economic or political uncertainty embraces the world, the gold has shined the best. And if you are an investor keen about diversifying and building a strong portfolio that bears less risk, gold would be your best choice. Even during those uncertain and hard times, humans have never lost their trust in this precious metal. But what if you are told that you have been blindfolded and we all failed to discover a secret that has been hiding for decades? Yes, you all heard it right. This isn't something we can figure out so easily. What if we told you the physical gold market where we all trade gold is just a small fraction of the whole gold market? Remember in the Titanic movie how the ship crashed after they mistook an ice mountain for an iceberg? Just like that, the gold market also runs deep, and it's not something we can catch a glimpse of in plain sight. So now you all might be pondering what the actual gold market is made of. Let's understand this with the help of a simple example. The physical market is where you purchase gold from merchants, but there are cases when we have put the gold as a leverage for accumulating capital to purchase land or to carry out our needs. However, this part of the market doesn't basically come under the so-called physical gold market. It's a trust, speculation, and leverage that boosts the entire gold market. The truth is, the major portion of gold that's being traded is paper gold. Here is where you all might have got it wrong. We all thought it's the actual gold that dominates the market. However, that's not entirely true. The market cap of paper gold is beyond that of the actual physical gold. As we're talking, the market cap is still skyrocketing. But why is this even happening? If the public isn't benefiting from this, then who is having the entire market under control? Most importantly, what kind of abyss hides behind this sort of financial wizardry? It's certainly not pixie dust, right? The paper gold versus physical gold debate has been around for a very long time, and it isn't definitely not something new. It's a subject that has been entangled in a great deal of debates over decades. So what exactly is the paper gold to begin with? We'll provide an insight about this part. Well, the so-called paper gold is an asset that also has the price of gold. However, we are not referring to that precious metal. Paper gold isn't truly gold. It's just worth the paper. So without holding the real stuff, you get to acquire the exposure to the price of gold. This would be beneficial from a trading aspect and not as a long-term investment option. Some of the commonly understood examples of paper gold would be gold certificates, pool accounts, gold future accounts, and most exchange-traded funds. You can conveniently buy or sell it electronically, and there's no physical exchange involved. As we know, physical gold and actual gold coins and bars that are being held by institutions or people as a form of investment. It's almost impossible to track the actual amount of gold the whole world holds. We all barely have knowledge of gold reserves present across the world. So an accurate comparison between paper gold and physical gold is almost impossible to conclude. A somewhat precise ratio of paper gold to physical gold would be 80-1, and it might even go as high as 200-1. Bullion banks specialize in anything that relates to the precious metal markets. This is similar of how commercial banks are engaged in the normal economy. Meanwhile, it's also observed that these bullion banks hold a very smaller amount of physical gold than the gold they have actually issued. This only works if the trust is still anchored around such institutions in the entire gold market. We have discussed so much about physical and paper gold till now. At this point, what really came to our mind is what would happen if the situation goes through a Uno reverse. This means the physical gold value would skyrocket. Then what would befall on the paper gold market? Most might have concluded that the paper gold market would rather crumble under the weight of the potential banks, boosting the ideology of the physical gold market. What are the odds, folks? What are the chances that the price of silver shoots up by 713% in just a week? No, we aren't exactly imagining things or bluffing. Back in 1979, silver had a golden run from mere $6 to $50 within a week. As investors or investment enthusiasts, we all are well aware of the influence the two billionaire brothers known as the Hunt brothers had in their silver market. They concluded that the real value of the dollar would steep down when inflation hits, and this would be the time when physical and future contracts on silver would pay well. The truth is, physical silver versus paper silver situation is much exaggerated than that of gold. Silver has more demand than gold, and it didn't actually stem from leverage or trust. The driving reason was utility. Silver has a major role in the vehicle and machinery sector, which explains the demand it would create. The Hunt brothers were estimated to hold about 1/3 of the famous jewelry, and they were in fact the reason for the infamous economic phenomena, Silver Thursday. This was created as they tried to corner the silver market. Billions of dollars worth of silver were held by the brothers, so the common public had to pay artificially high prices for commodities made of silver. As Hunt brothers went on to accumulating the metal, the world's largest derivative exchange in the world brought in an silver exchange rule that sent panic throughout the world. Overnight, this created a condition that restricted buying commodities using debt. So the Hunt brothers, who usually brought silver using the borrowed funds, had to pay back a major amount in a short time. Due to the same reason, the silver prices collapsed by more than 50% within 4 days. Like, why are we even talking about silver when our major focus is gold? Isn't there a chance that this same fate might befall on the gold industry as well? What are the chances, folks? Imagine the entire world waking up to chaos in the gold market. Before anyone could even get an insight about the condition, we would all be embraced by the breaking headlines on TV. This would be a lottery for physical gold holders. The price skyrockets and the world would definitely turn around. But this doesn't mean that paper gold isn't a reliable investment during the times of uncertainty and inflation. However, it is true that it would cause a wave and loss of confidence in paper gold investments. Based on history, it seems the entire paper gold sector wouldn't stumble completely. So a surge in the demand of physical gold wouldn't exactly have a negative impact on paper gold's prices. Although paper gold made transactions easy, it still came with counterparty risks. And eventually it would become more complex for us to speculate what is exactly happening. What we speculate at this point is, whatever happens next would be pretty odd as the entire sector is highly speculative. Will a Gold Thursday or Gold Sunday happen overnight just like Silver Thursday? What are your thoughts on this? Do let us know in the comments below. If you have liked this video, don't forget to hit the subscribe and like button. Stay tuned for such catchy content. The K-pop drama is getting nowhere, and we have more news of it. Check out our other videos. Until next time, bye.